Now, we'd like to put our money where our mouth is, so let's check in on how our trades that we have logged on this week have fared.
Okay, so it's not only trades we've logged on this week, in fact, it's the trades that we've logged since the beginning.
Okay.
Now, this chart is starting to look a bit dense. I think maybe I've got to come up with some new way of doing it. But look, the red and the green.
Let's look at the colors more. Is there more green than red?
They're more green than red, and we've got a couple of big wins there with Richmond in particular and SAB Miller, where we've also got a dividend coming its way towards us. We've got two positions that we entered that we're no longer in, which was both Naspers and Anglo Platinum, both shorts, interestingly, where we set quite close stops and got blown out of them. But the good news is that where we started with 100,000 Rand on the 1st of November, we're now sitting with a cash balance of about 103,600. So that's a 3.6% gain over a 6-week period. But to be fair, we have had a rising market and we've mostly been long. We've been in what I might describe as kind of quality stocks within the sector. The only other things we've done is we've made a few adjustments where on Mark's advice last week, we took our Richmond position and we introduced a trailing stop loss.
Right.
Because it's our most successful position to date, we didn't want to see all those gains evaporate. So what we've done is we've set it up so that it follows a little bit as the price rises.
Before you analyze the rest of the stocks pool, I just want to understand, I know there's no benchmark for this, but 3.6% in 6 weeks?
Well, look, if you could do 3.6% in every 6 weeks for the rest of time, you would be a rich man before the end of the decade. I think, though, that, I'm intrinsically optimistic and I'm intrinsically fundamentally oriented, and I like the idea of picking quality stocks in growth sectors. And that's typically dictated our approach. Okay, we've added a few short positions here and there, so we've got a little bit of market neutrality beginning to appear, but you can see we've got what looks like, 15 longs and 3 shorts. So we can't kid ourselves that this is an all-weather portfolio that's going to do well in all times.
Yeah.
One thing I just will point out is that we'll probably visit some of these stocks again quite soon in the new year. So we'll start having shows where we discuss again, and then we can say, okay, well, we want to book the gain in that one and switch to something else.
Yeah.
Alternatively, we might also decide through one development or another that I should liaise with the guy that was on the show with me when we picked these things in order to agree that we feel the catalyst is passed or the news with regard to earnings or whatever has changed.
So as we think about next year, perhaps you can give viewers an idea of the kind of thinking that goes into the construction of a portfolio like
There's
this.
that issue, and then we've now, having got into it, we've now got an additional issue, which Mark should come in on here, which is what extent are we invested? At what point does it start to become that we're dangerously over-invested?
Yeah.
You can see out of the 100,000 Rand portfolio, we've got about 30,000 Rand tied up in margin positions. My general sense is that's about as much.
Explain margin positions for our viewers that may not understand.
Why don't you explain it, Mark?
Okay, the easiest way to explain it is via global traders, CFDs, instead of taking the full exposure of the share, having to provide the capital to take a full share exposure, we require that a portion of that is rather posted instead. And that enables clients, should they wish to take on quite a large amount of leverage. In other words, if you would normally have 100,000 Rand and could buy 100,000 Rands worth of South African breweries, we'll only require that there's 10% of that money sitting there.
Okay.
Now, the good news is that enables people to take large positions. The bad news is that enables people to take large positions.
Yeah.
I like that.
So, as Paul so well said, the degree of leverage or the degree of gearing is vitally important, and because our actual exposure is more or less 1.76 times the amount of cash, we're not extremely leveraged. The share prices would have to go down by 50% for us to have any serious depletion.
Okay, final thoughts?
Yeah, I'm quite comfortable with where we've reached, and I am personally of the view that over the holidays we're going to have a relatively snooze-worthy Mangaung conference with the ANC leadership election. Then we're going to have resolution of the fiscal cliff issue because the Americans don't want to finalize that one too soon. They want to leave it right till the end.
They need to talk.
And I'm fairly optimistic about where we're positioned with Europe and all that. So I'm happy that we're long. But assure you that whilst we were not going to be on air, we're going to be watching this extremely closely. I think, with great gains come great responsibility. So we need to be on it, and the market is open, so we need to be aware of changing issues, news flow. So if there is anything that worries me, then we will exit. But if you're logged on to foralot.stoxx.com, you will actually get updates during the festive season period which relate to position closures.